Hey guys, welcome back. I'm your host Phoenix, and today's video is mainly focusing on the fundamentals of the Bitcoin rather than going technical. So in the previous video, I said something about the Bitcoin production cost acting as a main support level for the overall market. So today's video is highly focusing about what is the Bitcoin production cost and how it acts as a main support, or you can say how it can predict the bottom, and how it can act as the most important and the most significant support. So this is the article which I found which I found from the Medium website, and I will just post the link in the description. It's really a long article, but I will try to summarize this whole thing, and this article is actually very much interesting. It's just 8-minute read. If you can read by yourself, you must check out. So the thing is here, what are the takeaways? Like Bitcoin electric consumption can be used to estimate the Bitcoin production cost. So here the main focus is about Bitcoin electricity consumption. As we know that each and every Bitcoin is produced by mining each and every reward block, plus fees which are included during the transaction. So here we should firstly focus on the rewards which are been mined by the miners, and most of the mining machine works on electric consumption. So here the base level is the electric consumption. And by the way, most of the people ask Bitcoin is purple, or it doesn't have any intrinsic value like gold. But the thing is, electricity consumption itself adds something, the value in it. So basically I think that whatever energy is being consumed is reflected or is stored in the Bitcoin values. It's just my perspective. I don't know about how you can take it. So basically we'll just look at the Bitcoin electric consumption. Second is Bitcoin production cost. Third is Bitcoin mining has historically been proven as a very profitable business. So this is the actually a game changer, this line is actually a game changer in the future mining business. And it's this really is an important point which has been highlighted. And guys, look, this 2019 has been the worst year for the Bitcoin miners. So that is really interesting one, right? And second thing is just we'll check out what all this has been covered in this article very much in detailed manner. But this video is intentionally to summarize this thing, and as I said in my previous video about while doing the technical analysis, that how 7500 range will be the only and last potential support, and gonna be a very much hard support that bears can actually break it. So we'll just check out. So very first thing you can come across is the definition of a commodity, which is given by the Sir Satoshi Nakamoto, the one of the founder, you can say a creator of this digital cryptocurrency. So this thing you should always remember, guys, that he quoted very much in this small piece of line. He explained so much of thing that it creates a lesson for each and every generation to know what, how, and why a commodity pumps and dumps, and what can be the key level. So basic thing, the price of any commodity tends to gravitate towards the production cost. So here the important given is production cost. If the price is below cost, then the production slow down. So it's usual if you are like if it takes $10 to produce 1 liter of milk, and if the price goes below $10, like just take as $8, the people will, the production will actually slow down because you're not making profit. So this is again a very important line highlighting the present status of the miners. If the price is below the cost, profit can be made by generating and selling more. Sorry, if the price is above the cost, sorry for that, the profit can be made by generating and selling more. So this is happening right now, guys. That's really painful, because if the profit is much more than what you are producing, the cost of or you can say the difference between the selling price and the production price is more, definitely they're gonna sell. At the same time, the increased production would increase the difficulties, pushing the cost of generating towards the price. So you can say this line is highlighting the hash wars. And the fact is, like, each and after the 5 months, there is halving, like in the mid of 2020, May 2020. And whatever money you invest in mining hardware, it will be like worst ever mining hardware, because the production cost will actually increase and your profit will decrease. So everything, whatever the thing right now is going on, the Satoshi Nakamoto back in 2010, he has just predict the upcoming future of the Bitcoin, and you can see the cryptocurrency market. In the later years, when the new coin generation in a small percentage of existing supply, market price will dictate the cost of production more than the other way around. So I would, guys, suggest you to remember these lines, because these lines actually gonna work in each and every commodity market. So you should remember, or at least it's a lesson for me to learn from such a great guy, or maybe girl, I don't know who is Satoshi Nakamoto, maybe, but this line can actually change anyone's life. So yeah, this was a good quote. And the mining cost and the cost of electricity, everything data was aggregated by this Cambridge Bitcoin electricity consumption index. So basically they have just taken a lot of data from the various miners, and the cost per unit, so you can say the cost per 1 kilovolt of electricity, they have estimated as $0.05 per kilowatt per hour. So basically they have just estimated, or you can say they have taken as an average power cost across the world. So all these things are basically the data collection. So here are the Bitcoin production cost. What is a Bitcoin production cost? So let me summarize this thing. Like if you look, if you want to open your own Bitcoin farm, so what thing you need? First thing, you need a land. So for that you have to go for lease and you want to pay rent, right? So here the rent is included. Second thing, you need hardware, that is a capital expenditure again. So you want to invest by leasing the land, by renting the land. Okay, so you need a land, so you just pay the rent to the landlord. Second thing is you need hardware for mining. Bandwidth, you can need internet connection for validating each and every block, right? Wages for your workers, if any technical team is there. Insurance to protect your investments, and cost of capital, that is the mining each and every while using your hardware, they get worn out as the time goes, and even the efficiency goes on decreasing. So the Bitcoin production cost is actually the addition of all this thing, and not just the electrical cost for mining Bitcoin. So they have just come up with the various number. So here I will just try to explain everything. This going to this all this complex stuff, I will rather prefer to just focus on this chart, and just trying to figure out what is going on right now. So just to, this is the red band, and the upper line, the upper boundary is the Bitcoin production cost. So Bitcoin production cost includes everything, like from AC to cool your mining rig, to the hardware cost, the land you have to pay the regular rent from every month, and the insurance company you pay. So each and every blah blah thing just got add up, and it's a Bitcoin production cost. Now the second thing is the Bitcoin production cost, electricity, and this one is total, so it includes everything, and this is electricity. So what gives the value to the Bitcoin is this, right? Like for me, I just consider each and every input of the electricity as a value to the Bitcoin. So to mine the Bitcoin, the average electricity cost is highlighted here in this chart as a red line, which is going to the below one, this red line, right? And the above line, which is the parallel to it, is just overall cost, like insurance. It varies from country to country, but the average gap, you can say the average difference between electricity and the land price is almost the same. So here you can see that overall production cost is the upper band, and the lower band reflects the total mining cost for producing the one Bitcoin. So the thing is, I don't have the much more data. I just data from 2015, but we can see from here that each and every time if the Bitcoin price goes, even the goes below, you can say that goes below this Bitcoin production cost, it never have a bridge below the Bitcoin production cost, that is the cost to mine Bitcoin, per kilowatt. So the electrical cost for mining Bitcoin is the lower band, and it had never gone below it right from 2015. Even if you look here, the 2018-19 bottom, which is like 3K, it had never ever crossed the average mining cost, electricity one. I don't want to say the Bitcoin production cost. I'm just highlighting as a Bitcoin production cost the electricity one. The cost to mine, the electricity consumption to mine one Bitcoin acts as a strong support, as it seen from the previous data and even the present data, like between 2018 and 19. So you can assume for now that the below band, which is the electrical cost for mining Bitcoin, will act as a strong support, and which it should be. If the thing is, it's very simple, guys. If it breach below, already the miners are the miners are drowning right now, because the Bitcoin production cost is actually high than the price. This move actually wash out the small miners, which are incompatible with the other big giants like Bitmain and who's Antpool, and there are many much miners out there who can actually afford even if they don't pay the bill for like 1 month. So the small miners, with their low quality of the hardware, they actually quit it because this business is not a profitable. So this move actually wash out most of the miners. Similarly goes here. You can see here the actual production cost was actually higher than the price of the Bitcoin, and you have come across Ford, where you have seen a video where most of the people were dumping the mining rigs out there, especially it was from China mainland, and they created actually Ford that the miners are actually throwing away the hardware. But the thing is, guys, for which each and every halving, your hardware becomes incompatible with the new hardwares, with the increasing of the hash rate. So even if you take the new hardware right now, after the 5 months, it will be the piece of junk. So this thing is over a period of time. What I can conclude right now is, even before 2015, the mining business was much more profitable than trading, because you can see the gap between the price and the actual production cost. So what you can see right now, guys, is most of the people, most of the big giants companies are involving in the mining of Bitcoin. But it seems as this business won't sustain for the long time, as Satoshi Nakamoto clearly defined this in his quotation. See, if you look at this last quote, in the later years, when new coin generation is small percentage, so each and every halving, the generation of the coins decreases. All right, so when new coin generation is small percentage of the existing supply, market price will dictate the cost of production. So the market price will dictate the cost of production more than the other way around. So I don't need to explain this, guys, because it's simple that mining business will initially have a slowdown, and I can't say it will completely shut down, but only the big giant miners can sustain the market by upgrading the hardware continuously, and with each and every halving, the cost of production of one Bitcoin becomes difficult, and at the same time the hardware also get updated, and the hash rate is also increasing day by day. So this article is actually to highlight how this electrical cost can act as a strong support right now. So if you look closely, the Bitcoin production cost electricity is 5365. You can say around 5k. The 5k could be a strong support. So moving much more in the later part of the article, this guy has defined this guy, you can follow him on Medium, that the Bitcoin production cost tend to be a short lived. This makes sense as high cost miner go out of the business. The hash rate plateaus and the falls, and the miner in general are less inclined to sell at loss. So this thing is happening right now, guys. So even if you look what this article, this line is stating that the Bitcoin production cost tend to be short lived. If the price drops below the Bitcoin production cost, tend to be short lived. So he indirectly means that if the price goes below the Bitcoin production cost, it's very much temporary. This phase won't sustain like more than 6 months. So if you're selling Bitcoin right now, I don't know where I can find some idiots out there. So I don't want to say that, but yeah, if you look in the previous historical data, it didn't sustain. Like this was in the month of December, and just after the month of March, May, it just boom up. So this period is only for 6 months. We can expect this for the 6 months, as we started right from the month of October. So yeah, before halving, we might see some of the price action above like 14k maybe, but this line is also a very much good line. So I have just highlighted some of the key line. Okay, the losing miner would not have any revenue left over for reinvestment in the business. That continual capex is required to keep up with the generally growing hash rate, ability to pay rental contracts, wages, and other businesses. So this shows that the small miners actually gonna make losses, and eventually they will go shut down. So this move is actually, washing out the incompetitive miners. This miners, the small miners cannot, face the war of increasing hash rates, and eventually they just shut their businesses and go off the market. So that's what this thing is saying right now. Okay, so and this is Bitcoin price never quite reaches the electrical cost to produce a Bitcoin, despite coming very close in November 2018. So here, guys, what I'm trying to explain is this: if you are thinking, or even if your friend is thinking, now Bitcoin is falling, it's a scam, it's gonna go zero, absolutely, it won't. With increasing hash rates, with increasing the cost for production of the Bitcoin, with increasing the electrical cost, each and every aspect, it's adding the value to the Bitcoin, and the Bitcoin is not being created from thin air like the fiat. So before actually saying it's a scam, you should have a good research work. Nevertheless, what the line actually meant is it would never ever breach this line, but we can't say it could never ever breach, but this lower band can act as a good support, and not to worry right now, because we are at somewhere about 6k, or sorry, 6600. So I'm expecting the reversal anywhere from like 6k to 5700. So that region would be actually good for staking for the long term. Even right now the price is also good for staking, but it's not a financial level. It depends upon from person to person whether he want to stake or he want to miss the upcoming pump. So that was for making understanding much more. Let's just move ahead with the article. So minor profitable oscillator with an average daily profit. So all this blah blah stuff is very much included. And the other thing, the one of the most important line is this: 2019 is the least profitable year for the Bitcoin mining in all of the last 5 years. So again, I would say, guys, the business for mining is actually shrinking. And even if some of the company reaches you to just buy their IPOs, just think once, because with each and every halving, the reward's gonna get half. The cost of production will actually increases, and the profitability gonna decreases. So even if there is a IPO of any mining company, I would rather suggest to stay out of it. And it's not a financial advice, but if you look at the perspective as an investor, it would be a loss-making business. So this is a general outlook. Like the Bitcoin production cost will double at the next Bitcoin halving, currently estimated for the May 2020. So this is the hash rate, and okay, so yellow line is the hash rate, and the upper and the lower band actually signifies the electrical cost for production on Bitcoin, and the upper band the production cost, overall production cost. So even in this article he highlights about a future price prediction and the Bitcoin production price. Okay, so from this figure, if the Bitcoin hash rate and the mining hardware efficiency were to remain unchanged from today, the Bitcoin production price at halving would be 17,800, guys. Now this gonna hurt bears, and even the sellers at 6k, or maybe right now whoever is selling the Bitcoin. So just think, guys, once before selling your Bitcoins at 6k, or even lower than that. If you look at the fundamentals, the hash rate is continually increasing, the adoption is increasing, and the halving is coming, guys. It's only just 6 months from now. And even if you are selling Bitcoin for 6k US dollars, or maybe for fiat, I mean, that's just not viable. If you are in this crypto space for earning money, just stack it, because it's not you know I think so. Even if you if you buy from 6K and you are just holding till halving, like estimated as 17,800 could be the potential price action during halving. It's twice times your money in just a 6 months, so it's not a bad idea to hold right now. Although the hash rate can fluctuate widely, they are historical much more stable than Bitcoin price. Hash rate has never dropped more than 47% from its peak. The second largest drop was 37%. So one thing you have seen, guys, even the price of the Bitcoin exceed, I mean to say, even if the price of the Bitcoin falls like 50 to 60%, the hash rate only just falls by 47%. So this shows the continuously increasing in the network hash rates, and most of the people are still in this game for earning money. And that is with this numbers, I'm actually shocked that Bitcoin can be the only public ledger to be most secure ever in this world, to be made right now. So I don't know about after the invention of the quantum computers, it would be little worry. So moving ahead, guys, even if we'll just look this last few lines, because this is the mostly conservative perspective. So even if the hash rate were to drop 40% below today levels, and the mining hardware efficiency were to improve 25% in the next 6 months, the Bitcoin electrical cost would be approximately 8,000. Now this things tells a lot, suggesting a pessimistic case price floor for the mid 2020 of 8,000, 8% higher than the 2 days Bitcoin price. So this article was on 13 December and we're at 18, so never mind. But have you just focus on this word, guys? Bitcoin's electrical cost would be approximate 8,000. So if you look, we are talking about the lower band would be near the $8,000. So just again, guys, think twice, thrice before selling Bitcoin like around 6K. I mean that would be a terrific ever trade made in your life. If you think just wisely by going by going through this article, you will understand the fundamental of the Bitcoin. And being a technical trader, you must also focus on the fundamental of any commodity. So the thing is very much simple, guys. This article was like for 8-minute read, but most of the people actually get confused with some of the few terms. But the thing is very clear that during halving, the Bitcoin electrical cost would be around $8,000. And just imagine, let me just mark some few points on chart to make some clear perspective for you guys, so that you can also earn a lot of money, rather than sitting on the chair and looking that why you have made a bad decision at that time. So like 17,800 was what he was estimating, right? Okay, so we are just this one is like 8K. So if you look during the month of mid of May, right? So guys, how much we are just away from this thing to happen. We are just like 150 days, like 150 days approximate, like 150 days from now, and you want to miss this type of gains, like 126% is twice your money. So just think ideally, if you are selling here and you are just expecting that Bitcoin gonna go below 7,500, it won't gonna happen right now. And if it happens, it would be the terrible case for Bitcoin and the overall crypto market. And I think so, if it goes below the previous bottom, it would be anyhow failure of the invention of the Bitcoin. So think wisely, guys. For today's video, I just want to conclude few stuff. Like in May 2020, the lowest price you can think is 8K, and the highest price you can think is 700-800. So just this is all speculative and it's not a financial advice, but think before doing any worse trade before this Christmas. Alright guys, so today's video was much more fundamental, and that's all for today guys. Stay tuned. Peace.